Hello everyone and welcome to today's No FOMO Charts, Stocks and TA Crypto live stream. It's a technical analysis live stream today and every day actually when I do this stream, where we look at stocks and crypto to see where we are in the current market right now in regards to the price and volume. So welcome everybody. Let's go ahead and get started. In the USA, stock market earnings season is ending or is over, depending on which companies you're looking at. For the most part, stock earnings season is over. In the past week, the biggest news was that the USA Federal Reserve, FOMC, raised interest rates by another plus 25 basis points. There was also a banking collapse in the USA with the smaller regional banks. If you haven't heard about that, Silicon Valley Bank, Silvergate, First Republic, etc., and the US government and the Federal Reserve and other large banks had to basically bail out other smaller banks to protect uninsured deposits. So, where does that leave us right now? We do have some companies reporting. We have Carnival Cruise, Micron Technology, Walgreens, Calmain Foods related to eggs, McCormick, Restoration Hardware, and BlackBerry. There's that one meme stock in there as well. In terms of economic data releases, we have final GDP. That's a big one. Consumer confidence, unemployment claims, Treasury Secretary Yellen is going to speak again. And the biggest piece of inflation data coming out on Friday, the core PCE price index. This is what the Federal Reserve Chairman really looks at in terms of the inflation data. Now, he did say at the past meeting, I'm paraphrasing here, that he is looking at the totality of the data. So that's jobs, that's inflation numbers, that's CPI, PPI data, probably PCE data as well, but also certain housing sectors, industrial, banks, obviously, etc. So it's more than just one data point. Moving on. It is the end of quarter one, 2023. This week, the first 3 months has been a rough one, volatility-wise and weather-wise, but we're getting through it. Hopefully, things can start to calm down, hopefully, in the stock market and the economy. Also, the congressional hearings for Silicon Valley's bank collapse starts this Tuesday. EU institutions also watching the status of banks and deposits, other big corporations like UBS Bank, Credit Suisse, Deutsche Bank as well, all on alert. Also in crypto, Coinbase was sent a Wells notice by the US SEC for allegedly violating their security laws. This is related to regulation enforcement, so it's kind of a big deal. We also have that IMF crypto regulations paper coming out in 6 months from now in September 2023, so that might have a relationship. We might see further volatility from that as well, and we do have the Litecoin happening in August 2023. It's just 5 months from now. Something to keep an eye out for. Okay, let's jump right into it. Hello, welcome. I'm streaming live on TradingView, YouTube, Twitch, and my Discord as well. If you have a request, go ahead and type it in the live chat right now, and we will get to it. I'll get to it after I do some of my the usual indexes. Let us start off with the Dow Jones. Dow Jones, DIA. Dow Jones under the 200 EMA moving average. Right here on this red. We're under that right now. So let me go ahead and start over fresh on this chart. If you're joining for the first time, this is how I look at charts. I'm a swing trader and investor. I look at longer time frames. We can see if I draw the resistance on the top, there is a pivot support on the bottom side here. And if you stretch that out for 2022, that's what that looks like. So if we can manage to hold this price above $316, I'll put a line here, 315. That would be good because we have a chance to hopefully bounce up. Hopefully, I'm talking about the price as well. If we just look at our price action right now, if we could hold the support, I'm going to star this for next time. I'm going to star this for next time. You got to find my symbol. This changed actually. This is a new emoji menu. Looks nice. Just take a look at it. It's the full emoji suite. All right, but for now, I'll just put this little dot here. The support level we're watching now. We have our Fibonacci support. This purple dot, which is the support of this bottom trend line, that's our 50% 6.8 retrace level, $315 and $307. So if we can hold that, that would be great. Low, high, low. If we make a lower low, going straight into that target, about $310. If we can hold this, and we would probably have to see some kind of like hammer candle, something like this, hammer candle, that or a support formation to really hold that up. Now, this week's news will probably dictate that move. Now, switching to candles on the weekly, you can see the weekly as well. It's trying to form the support. Can this turn into a morning star on the weekly? That would be nice. We would bounce back up to 335. Weekly is not really super oversold. It's just riding that higher low support. The daily momentum forming. If we can hold support, that's what I'm saying. It's good. We already hit that low on that 4 hour on last week's stream. Almost had the upside down head and shoulders. Couldn't quite get it. So this is what I'm saying. In terms of head and shoulders or price patterns, they're not always 100% perfect. And it has to break and hold above the neckline for a pattern to be completed. So this old target would have been like 2.5% to the upside, but it did not break, didn't even go anywhere near 330. The hawkish, bearish FOMC meeting brought us back. But the positive side is, again, we had this $315 support level in this blue line. If we never go below that, that's great. That's fine. We can consolidate and we're going to see, are we going to get a breakout above or breakdown below? That's all I'm looking for as a swing trader, and then I'll make my move accordingly. There's no reason to jump in when there's no particular setup according to my criteria. Next, S&P 500, we have a lot of lines. Sometimes I like to do a refresh in terms of drawing the resistance. There is a support here. Yes, I could say something like that very loosely, but we could also connect these multiple lines here, right? So the S&P 500 is clinging to life here on the bottom of the support. If I lower it a little more, you can see it's trying to maintain the support, almost looking like a symmetrical triangle now, almost. In the very short term, a little sim triangle action going on. What's the measure move of this? About 9% up or down. So conservative would be about 4%, taking us up or down to either resistance or support on the top side or the bottom side. So now we have this price boxed in on these targets. This price is boxed in and going to let the market make its move. Digesting news, digesting price action on the charts, right? It's starting to squeeze a little bit. It's not, if you know Bollinger Band volatility, it's not a super tight squeeze, but if it keeps consolidating, it will squeeze eventually. In terms of EMAs, it's very tight. I mean, look at this EMA action. That's what I'm saying. It's squeezing. The EMAs came back so close to each other, where the average is like $394. It is still in a short-term downtrend in the price. In a medium-term consolidation going sideways. Very long-term, it's still downtrend if you're looking at like a 1-year chart, 1.5 years. On the weekly, check this candle. Again, possible bullish morning star if we can hold this low above 380. 4 hours, very similar as well. There's not a quite super oversold or overbought as well if you go deeper. All right, so the 5-minute 15, at least on my delayed chart on this ETF, it's a little bit in that overbought range. So we might see some volatility at 6:30, 9:30 a.m. tomorrow in the US market. For day traders, trying to get a little bit of 5-minute cross. It's overbought, so I wouldn't mind if this came down, test that, and then we rallied one more time off some good news or something. We'll be okay. That's the S&P 500. Let's go to QQQ. NASDAQ. Now, tech stocks. Similar, except tech stocks is at a resistance point. It's not at a support point. That's why I like to redraw this thing. Tech stocks having its nice day. See, that is different. This is why I chart. This is why we chart, because it's actually different on this chart. Trying to draw the support that we did have down here on this candle body close, or the candle body closes, had a little pierce to the downside, which is okay. But we can see that tech stocks rebounded, back tested the support level, and bounced again. What I'm concerned about is, are we going to break out above 311, 315, yes or no? Because if it's no, this is a double top bearish price pattern that could be building. Any significant bad news in the tech sector can crash this thing down. Major pullback about 5 to 10%. If we lose 286 on the price, that's bad news. That's bad news. That could be 256 downside target. All right, but as long as that holds, that's kind of okay. If we're going to consolidate, okay, fine, that's fine too. But we have to make a move, bullish or bearish. But the fact is, at a resistance, is struggling. A couple days of shooting stars and doji, right? Trying to hold this a little bit. This could be considered like a dirty double bottom. Let's see what this target where could be. Target 5%. Just tap that target. Double the target would be a 10% target up here at 317. We have to clear that and hold above it, just like Bitcoin. Just like Bitcoin. Now, weekly, we are seeing we get some of this bullish engulfing and a continuation candle to the upside. On this 4 hour, looks like the EMA is up crossed. Still, we bounced off of that 200 EMA support. Bull is bought, and we're riding that up now. So these are our support levels. Where 307, 302, 300, 292. We just need to defend those as a bull and try to break out as well. 4 hour, not quite oversold. So if someone's looking for deep value on a relative, it's not there anymore for now. At 1 hour, it's riding, so it's uptrending, riding the wave. It's different. QQQ is different. It's not the same as S&P 500 chart. Hello, welcome. If you have a request, go ahead and let me know now for stocks. Okay, GLD and SLV, gold and silver. So we're hitting this, we bounced off of this 200 EMA, great. Defense and flight to safety as well. Bouncing up to resistance. This looks like the QQQ chart, looks like Bitcoin a little bit as well, in this 185 level. Now, I do want, if we erase everything, all I need to know is we're golden up cross right now, and we back tested the 200 EMA. So this is there's multiple entries for gold. If you want to learn something, education, support, entry, resistance, short, support, entry. Now, if it's going to bounce and continue up, I'm going to let that one ride. Let that one ride. Now, where we're going to go in terms of targets, 186, that's gap resistance, 188, and there's probably a 200, there's a 195, and there's a 200 way up here. If we can get that, almost looks like the oil chart after it's crashed. Remember that? High, low, high, low, high, low. Where's the higher high? How high can we go on gold on the flight to safety in this banking crisis scare, which is actually real? So if we can, on the weekly, if it can keep going up, the price, then the bearish divergence momentum will finally activate, and then we'll have a pullback on gold as the EMAs fan out to the upside. We're already starting to lose that momentum. I'm starting to see it. You can see on the chart, this setup, losing loss of the MACD EMAs going down, EMA of the RSI as well. Bit of a tongue twister there, but in terms of the bearish divergence setup on the 4 hour is building. 1 hour is also there, but it's still neutral on the RSI. So what needs to happen is you need to have a short-term pullback, one more bounce, and then the crash. If it's going to be a bearish divergence play, could take a while. If we keep having bad news in the market, then support holds like a 180 support, and we don't crash below this, we're going to see probably higher highs on gold. Watching out for that. Next. SLV, slightly different. We had this nice, beautiful higher low RSI continuation bullish momentum here in the beginning of March, and we broke through that, almost all this banking crisis situation. 15%, beautiful. Gotta love. This is the support plays. This is the bounce V-shaped recovery plays I love. This is my style, right? In terms of let's see downtrend. You see a 5-wave alien wave going down, essentially, right? You have your one, basically 2, you have a long 3, 4, something like that, obviously, and then you have a nice reverse A, B, C correction. If you know your Elliott wave patterns, sometimes it helps. Now, if we look at the low to high on candle body closes, right? Because if you go to line chart, we look at candle body closes. Where are we? We blasted through, gap up the 236 level. So I have to kind of peek inside for this one. We got this golden cross on this H4 chart. It's in the overbought territory. Triple MACD dominoes falling, momentum falling, I like to call it. 1 hour still in the uptrend, losing momentum. So we're probably going to see a little bit of a pullback. We might not get a crash though. So we might see a pullback like this, where you pull back to the 50 EMA. So look at like $21 or $20 as support. Hopefully we can keep this fanning out of the price around silver and continue the momentum trend to the upside. Very quickly, look at US oil, very sloppy looking chart, but why did I draw it like that? Because the last pattern we had was kind of this almost the ascending triangle, but is a fake out because we hit this resistance and lost the support, gap down, shorts covering, hit the EMA. We might see another bit of a pullback as that setup usually happens. So for instance, if this thing falls down, let's measure the move. Was it 13%? Did we hit 30%? Basically, yes, we did. Right on the dot. Then shorts, no. Let go. Close. They try to open up another short. Now, 2 ways that can happen. When this usually happens, you can either get a continuation to downside, right? So I'm looking at $60 support and 57. And if we lose 57, this shorts are going to really attack this thing down. However, if we hit a higher low and we survive, then shorts are really going to have to let go and longs will begin to attack back to 65 area. It's all about the trading activity between the bulls and the bears. Excuse me 1 second. Okay, mic is back on. Let's go to UNG now, and then we'll do some requests. UNG. Actually, we need to look at sectors before the request because I don't like to go straight into one-off requests without looking at like a broad overview because people sometimes get tunnel vision on the request. So, or what they're looking at. So UNG, we hit the support level of 716. Now it's turning into a larger double bottom possibly on this weekly. Again, same thing applies. If we lose $7.12, you can kind of see, right? This almost looks like the USO except extreme. We had this one bounce up and then it faded back down. Sometimes it fades back down and we lose that support, short. If it holds, then we might get a nice, beautiful double bottom bounce. So I'm very closely watching this. There's like plus or minus 20 to 40% on UNG, but it doesn't always respond to technicals perfectly, which is why I don't really push this on people too much. But if this holds a little bit of this little flag right here, right? A little bit of this, still a descending triangle, but we're starting to see this higher low on the RSI. This building, it's not quite ready to pop up just yet, but it's building. And I'm sure if we have a breakout, shorts are going to let go of this on futures. All right, let's take a quick glance, at least at the sector ETF, so we have an idea of what's going on before we jump in. We did look at some indexes, but we'll take a look here at the sectors really fast. XLF still consolidating down here as well. And again, until there's a reversal on this side, not much happening here. But when the reversal happens, it's gonna be large volatility for this ETF, like 5%. Energy sector, let me change to a line chart. It's easier for you to see. If we get this higher low, you were seeing this, right, on USO and UNG. If we could hold the higher low above 77.75, attempt at a bounce. If not, maybe it'll consolidate into a triangle. So I'm looking at that as well on the daily. XOU already had its bounce. This looks like if you're on TradingView, it's like a dirty Bart pattern like that, or a triple bottom support if you're a stock person, right? So there are setups here. We don't necessarily have to chase one individual stock, is look at sectors as well. XLI as well, trying to just barely hold on to this blue support on the downside. If we could hold on, there's about maybe about 3% volatility there. XLV, okay, trying to see it is down cross, but we are starting to see a little bit of this sideways, upside down head and shoulders action. If this is real, 3% breakout, it needs to hold above the neckline and rally considerably to 132. XLP, again, we're seeing this, right? People, why? Because if you were watching the FOMC Federal Reserve meeting, yes, we did have the 25 basis point increase. Yes, we did have a little bit of encouragement in terms of dedication from Federal Reserve and the U.S. government and Treasury Secretary Yellen basically saying they're not going to insure every single deposit in the failed regional banks or smaller banks, but they have enough capital to try to protect, basically, I'm paraphrasing. And the FOMC Federal Reserve said there might be one more interest rate increase this year. Don't quote me on that forever for this year, but that's what he said at the meeting last week. So that's why some people might be thinking, oh, maybe if we can hold on for 6 months or 12 months and let the worst of the inflation crisis pass and the banking crisis pass, the market might have a chance to rally because we've been down so much. That's why. If this is the bottom of the market, let's just pretend if we're staring at the bottom of the market right now, literally, let's say we're on this right side, we're about to exit the bottom of the market. I might want to open some position. It really depends on the situation where you're looking at and the data that's coming in every single week. XOY is a little bit different. It's at this resistance point here, kind of fading back down. But this could be, just like TradingView said in the article, it could be a bullish continuation pattern if you zoom out a little bit, right? We had this rally up, fade back down. But if we hold the support and get a higher low and break out of here, then it's continuation pattern. XOB, nice in terms of holding this support on the downside as well in the materials sector. Real estate had another crash, but right to my target, last week's target, right to 34.56. And then I'm going to watch for this very closely to see if we get some kind of sideways pattern and a reversal. Shorts have to close, longs enter in and go, go, go. XOK bounced out the 5200 EMA, is beautiful double bottom play. As I was saying earlier on QQQ. Communications following suit. Now, semiconductors, this is the last one we'll look at before I go into your request. Semiconductors is still in an uptrend. So that's why you get people hyped about AMD, NVIDIA, TSM, Micron, which has earnings this week. It's in a 5200 EMA up cross. And if we can hold these lows, again, the low would be support would be 237 here and resistance would be 278. High, low. Try to get this higher high if possible. We have ABBV request. So we're looking at XLV, right? Death cross, but we have the upside down head and shoulders potential. It might not be quite the bottom as we've seen back in August, September, October. It's kind of in that formation of creating a low here. So for your reference, Casey, if you're trying to figure out ABBV and the whole healthcare sector, is this August, September, October, November would be the exact situation of the price that you would want to see to really ensure. And this goes for S&P 500 as well as XLV healthcare ETF. That's probably what you want to see because there was a death cross right here in September 2022, and then we did crash, but then we hit the low, higher low, and we got out of there. So if that's going to happen again, we could have a rally, maybe one more crash, something like that, and then rally up or break out and just go straight back up to the middle of that heart line. Now we get to the request. ABBV, AbbVie, pharmaceuticals. They make a lot of products. Now, before we go into fundamentals, just look at the technicals. All right, so I'm going to zoom out. I like to look at from the pandemic low because that's usually a low from a lot of stocks. Now, is it uptrending long term? It kind of still is. If we're really honest, it kind of still is. It's kind of doing this right now. So that's what we're seeing. Now, is it going to blast off to the moon? That's a different question in itself. However, keep boxing in the price. I'm drawing support and resistance lines, very important. All right, so we can see that ABBV is still in an uptrend long term. Let's mark the lows. There was a low, there's a dip, there's a significant dip, and we might have established one more. Let's mark the resistances up top. We have our resistance top. There's a big, almost failed breakout. This is the top of the market. And then we had a small one here. Now, one thing I want to point out, this is education for everybody, is do we notice, I'm going to turn everything off. Do you notice on this chart, where's one spot where the price kind of went too high, too fast before crashing down? Let me just mark it, the zones. Was it zone A? Was it zone B? Was it zone C? Or was it zone D? I'm talking about the white price line. Where, to your eyes, did the price go up a little too high, too much, too fast, for too long before crashing down? This will help you with your education, your knowledge. For your technical analysis. You don't have to type it in the chat. If you're brave enough, you could type in the live chat. But at least say it to yourself. I'll give a couple more seconds here. Where did the price go up too high, too fast? A, B, C, or D? Okay, so the answer is C. Answer is C. Why? Because it's this right here. I'm talking about this. I actually did a big circle. You can see in the other times, right? If you just measure it, it's like our bottom to top, we went what, 60%. Pandemic bottom to top, we went 60%. This bottom to top, 40%. Bottom to top here, 70%. Bottom to top here, 22%. Now, so 60 to 70, so what is that? It's like about 65% average in the long-term moves, and it's you have to hold for like a year, basically. But you can kind of see the FOMO here on the chart. That's what I'm trying to get people to focus on, is how do you avoid making a mistake in the market? How do you avoid buying here? You just don't buy there at the circle. Because if you do technical analysis, I look at this chart, I see I probably do not want to buy here. And that happened to be basically the 6 months before the top of the market. This is the top of the market, basically. So now, that was an educational aside for everybody to learn. Now we're going to look at Casey's trade. So hopefully, if the market establishes this low here, we could try to bounce up to the high resistance, high, low, higher, high. So what is this trade? 160 long entry. What's the price right now? 158.02. So the entry is above the price. Okay. Price target of 166 with a stop loss of 154.03. So this is only a 1-to-1 play, Casey. You would have to open up your profit target double, right? Also, this stop loss might be a little bit tight because you told me you're a swing trader. And again, I'm not singling any one person out. It's just Casey is a regular on the stream. Let's take a look here. So on average, this stock moves $3. So $6. So the stop loss is basically correct. If you just open it just a teeny bit to about maybe a 4%, and then maybe changes to an 8%, that might actually fall a little more comfortable into the metrics. However, we do see that on my blue underline, we did bounce off this area, right? So in terms of the support, the margin of safety is already, it's a little bit getting into the yellow zone, right? It's already up 10% off this super low, and it's already up like 5% off this, the bounce here. So in terms of the margin of safety, it's, you might have to wait a little bit for this one, right? Because if you want to get a great entry, I'm just saying, would have been Thursday, March 9th, because there's that oversold. Also right into here in the beginning of February. This is why swing trading kind of have to be early if you want to be safe in terms of not get stopped out. It's not about being safe, but it's like if you want margin of cushion, rather than after it bounces up. And then let's say if you buy here, because you're basically a breakout or a breakdown trader, like a continuation trader. That's what I'm seeing like every week. Is a move happens and then you would enter like somewhere here in the middle, trying to catch that last part on the move. But I would say I'd recommend, because I respect that you're coming to my stream and you're doing these plays, the risk reward. I really do respect that, because most people have no idea about that at all. And so what I'm saying is maybe consider trying to find some stocks if you're looking manually where there's like a very, very clear topping out, that you could say like, wow, there's a very high chance that thing's about to come down. Like right here, you have a double top and it breaks down into support. So instead of shorting like down here, which most people will do, is I would short right here, the first loss of that. And you capture the whole 6-7% with the 3% stop loss. Now the reverse is true. If I'm trying to enter here, I'm looking at a 4-hour chart or something. This is a pivot, but there would not have been a line back here on February 7th, but still the fact that you get this, where's this? This blue line, MACD going up, low RSI, bye, right? Then you put the 3% stop loss here, 6% target, you would actually already close the trade. You would be 3-1 right now. So those kinds of perfect plays, it's sometimes hard to time that because you have to watch that stock really perfectly. And then, there was that downside cushion of negative 3% on the way of this forming, and there's probably bad news. It's like almost 2 months ago. But you see what I'm saying is that in terms of, like deep value, if you want deep value, you want very good support entries, that's my style. And that's why I have a higher win rate than I would say other people, is because I hunt for that in the market. Now, continuations, it has a less of a chance, because if we're only going by, quantitative measures or technical indicators or a strategy or something like that, this is not my strategy. This is the RSI is 64. It's pretty above neutral. The 15-minute is in an overbought range, so you might see some volatility down. So for you, all I can really say is you want to try and buy a dip. That's all I can say. You want to try and buy low and sell high and buy a dip. This is a peak right now on the price. If you know multi-time frame analysis, on an hour, it's a high. So just want to watch out for that. If you really want to get into ABBV, that's what I would say as education for like paper trading purposes. Okay, so there's that example, and I put a lot of education in there for everybody. It's a great example. Thank you, Casey. All right, let's look at just a couple more stocks, and we'll go to crypto. Looks like people want to go to Bitcoin. A lot of questions about Bitcoin. If you have another request, just let me know, and I'll do like shorter requests. Now, why do I always look at some of the big stocks? We kind of have to pay attention to big market cap stocks as well. Like, what's Apple doing? Well, Apple is making a higher high with the golden up cross. So see if we can retest that or not. Right? A little bit of this bearish momentum forming, but it might take a couple weeks for that to pull back. Amazon, nice. Amazon trying to hold a large. Let me just erase this now. Amazon, the large upside down head and shoulders, or somebody could say it's just a giant consolidation play. Giant. But still, this is what I'm saying. If interest rate is not going to go up anymore, at some point we're going to bottom. Is this the bottom? It might be. This like general area for the next 1 or 2 years, maybe. Or it might be one pit stop on the way before it makes another move. The reason why I'm not super bullish is we're still in a downtrend. So if I want to be conservative, I wait for this thing to break out. But if I want to get aggressive, I've already been trading this thing for a while now, right? This could be a bottom formation on Amazon at least, but it has to break out and hold above and just rally powerfully up 25% to the upside. Okay. Google. See, this is what I mean. Is I know it looks like chicken scratch. There's too much, looks like scribbling on the, but if you actually look at where was the entry on this one, right? It's on the silver line, right? So that's what I'm saying. If I identify a support level, this thing is making higher highs, higher lows. It was actually kind of a sim triangle with some couple failed breakouts. But if I make an entry at $93, I'm up, right? My stop loss is way down here. So that's what I'm saying. Trying to do breakout plays as a swing trader can be punishing. We could get punished for that because sometimes, without looking at the multi-time frame analysis of smaller time frames, right? This thing could easily pull back on you. That's why the strategy a swing trader uses is very, very important. This applies for crypto as well. This is why I'm called no FOMO. Because if I keep buying highs, that's FOMO, right? You want to buy lows. The only problem is when it's low, it's scary in terms of emotional. And nobody wants it. Everybody's gone from the chat and everybody disappears. That's how I know, not just the chat, but, online forums is quiet. You could just feel it. If you're in the stock community or crypto trading community, it just becomes silent. And then maybe it's a reversal spot. All right, so it's interesting, but we're looking at tech right now. Tech has been bouncing. Let's look at a couple more. Look at Tesla as well. I mean, we all caught the, not everybody, but we caught this 50 to 100% move. It's absolutely beautiful. Now, what's going to happen on Tesla? This looks like the S&P 500 a little bit, right? In terms of also NASDAQ. But this is kind of an anomaly, right? This super crash, this is what I'm talking about. We lose that support, then bears are going to attack the market with all of their billions of dollars. And we had a reversal. So this could also be a long-term upside down head and shoulders, watching this neckline above 208 and see if it breaks out above that. That would be kind of nice. We might not get this full move. That's like an 80% move. But you never know. Never know. Never say never with Tesla and Elon Musk, right? If they can innovate and fix their products and really, really tighten up profit margins, you can see some positive moves. But what we've seen is we've bounced off of this. This looks like a 382 retrace or something on the Fibonacci. Basically, 382 retrace to the 236. Now, this is still a lower high on this. So if we get the lower low, 157 is our target. If we can hold this, then 215 is our target as well. All right, let's move on. All right. Thank you so much for watching and following. I'm streaming live on TradingView, YouTube, and Twitch. I have a Discord as well if you want to support and join the community. Thank you for watching and following. We're looking at cryptocurrencies now. TOTAL. We just passed the FOMC Federal Reserve meeting. There are some regulation problems with companies like Coinbase, etc. We still have bank risk as well. But where are we in crypto? That's always the question I like to ask. What's going on with the price and what am I going to do? We still have a little bit of this breakout going on the daily. Trying to draw these lines. We're drawing the support line as well. Okay, so like I keep saying on every single stream, this bottom, October 2022 to January, February 2023, this blue line is our bottom of the market for now. That's our tradable bottom. The fact that we hit 890 billion and rallied off of that means people are bullish on crypto. People are bullish on crypto right now. So we need to never go below this blue line. That's the final line in the sand before we get into big trouble. We are trying to attempt a breakout right now on the daily chart in crypto. It's going to take some time. If you're a swing trader investor, you know crypto takes like a year, maybe 2 years if you're an investor. Let's just think about it for a second. 2020, the crypto crash. How long did it take us to get to the bottom of the pandemic crypto crash to the top of the pandemic low to pandemic high? How many days did that take? Point to point. 616 days. 616 days. That's like 2 point something years, or like 1.75 years. It's more than a year and a half. You see what I'm saying? As an investor, you have to hold for like a year. You just have to buy at a great spot and then not get scared out of the market by big money. Big money wants to scare retail and take their position. Can't get scared by big money unless it's like a pandemic or a 2008. Then you want to pull out of that investment. But if it's just regular trading, if it's regular run-of-the-mill recovery and we're gonna have a nice breakout, can't get scared out of that. Actually, the setup was this. Is the ascending triangle setup right there. That was the setup, and then explode to the upside. Now, if we look at what's going on now, people asking me, going up or are we going down? For now, it's a short-term up, right? Medium term, it was down. We just broke out of a sideways pattern, which is good. I want to see that. We're still not in the clear yet. It's not out of the woods yet for crypto. Okay? Because why? We're right at a resistance zone. Right at resistance. We broke out the support, fine, good. Now we're at the resistance zone. We need to break out above 1.25 trillion and then never come back down. If this is the real moon rally. So that's how we know. If not, I am starting to see on the weekly, this is not for sure yet, but we have to see what happens this week. But if we have a red candle for this week, if we have sell-off in the crypto market, that'll be an evening star pattern. That's bearish. That's reversal, right? We had doji last week. People are not sure. It's topping out right now a little bit as well. And we're talking about all crypto right now for the most part in general, except for maybe small altcoins, or if some fundamental change happens. It's not completely oversold. There might be a little bit of bounce on the 15-minute 1 hour, but it's not oversold yet if you're just looking at that indicator. Now, it's attempting, it's trying. This is dirty. If you think about it, this price action, what is this, right? It's dirty. It's going sideways. So people are not sure. They need a little bit more information, more data to figure out, is it good or bad? Are we bullish or bearish? That's what people want to know. But we'll probably find out that answer. And it's probably related to the banking crisis as well. Kind of put a kink in things. But the volatility of this dirty structure is plus or minus 6%. Now, somebody asked me Bitcoin futures. Again, as a swing trader, these are the support plays I love. This is a support play I love. I identify a low in the market, a price pattern low, and you buy, and then you just in the trade. Okay? So again, I am not a scalper or a day trader anymore in crypto or stocks. I am a swing trader and investor for the past couple of years. And this is my strategy. This is what I love. I buy low, sell high, and you commit to it and let it run. Let it run. Especially, sometimes it's wrong though, right? Because somebody might say like, wait, what about like 3 months ago? Sometimes it's wrong. But that's trading. It's never 100% correct. That's life. As long as I manage my risk, I'm okay, right? Because if I do this one, then that one, if I buy, let's say in this pink area, then there's just, I got stopped out. I could have sold at the top. Some people did that 20%, okay, great. And then it crashed back down. But if I held it forever, then it crashes down. But the second or third time, let's say if I bought in the second time, crashed down, lost money. Third time, that's the charm. Not always, but in terms of this, it was the bottom, which I'm still in here, which is fine. So if you're a swing trader, this is what I'm talking about. You want to focus on these types of plays. Finding a low, not just a small low, but it's like, what's the low? Where's the bottom of here? Is there a setup? Yes, there is. On the price pattern, the sim triangle right here. Symmetrical triangle with the breakout. So somebody bought this exact breakout as well. Somebody's entered in right here at 17,705. Almost got stopped out here, but we had that gap support. And then the banking crisis happened, and then crypto becomes a hedge safety fund, just like gold. So hopefully this helps demystify what's about to happen with crypto. Is we are starting to lose a little bit of momentum, but we're still in the short-term rally. High, low. How high can we go? Looks like 28 to 30,000 is our resistance right now, and our support is 20,000. As long as we stay above 20,000, we're fine. We're fine in crypto. 25,000, it's debatable. But if we lose 20,000, there's a problem now. If we break out above 30K, then we know, all right, let's keep going. Let's keep making that high. So it's all about playing these relative levels and understanding we can't get spooked out on the market because of red. We have to understand, if you understand potential like upside down head and shoulders or support plays or even your indicators, it's all about that. And you might be wondering, okay, you understand it, but how can you get better at this? Paper trade, bar replay, study the charts, and you'll get better over time. All right, I do have another question here on YouTube. All right, this question is for Hassan. Thanks for your stream. I learned a lot from it from the past few weeks and heard about a new financial system and the end of the existing system. And social media says XRP and XLM is the new currency of the new system, is backed up with gold. They advise you. What's my opinion about it? All right. Well, first, I cannot give financial advice on this stream. But second is, for now, I believe the future, this is just my personal opinion, has nothing to do with anybody else. This is my personal opinion. I think in the future, we're going to go to stable coins. That's what I think the future is. We're probably going to get a US dollar coin or a Federal Reserve coin here in USA because I don't think the US dollar is going to be replaced for a long time. Because that would mean every single government, institution, corporation, bank, citizen, and every other single country, I was trying to say country and continent, that is connected to the US dollar banking system, like we all have to change at the same time. So it's going to take probably like decades for that to happen. But in terms of, let's say, the digital US dollar coin or like a Federal Reserve coin that's backed by US dollars or backed by gold or something, or backed by silver, I think those kind of coins will probably come into the forefront. But we have some serious regulation problems with crypto right now, so the world is not ready for it. Do you live in the USA? Because in the USA, XRP got kicked off exchange like 4 years ago. So, and right now, Coinbase just got a Wells notice regulation. They got basically in trouble by the US SEC saying they are dealing with unregistered securities. So right now, it's not going to happen. And the Federal Reserve has talked about it in the past couple of years, but there's a highest chance that there's going to be like a US dollar stablecoin in the USA. So that's why Europe is slightly different, but here in the USA, that's just my best guess. It has to be government improved. It's going to be government controlled as well. And that's like the antithesis of crypto, because crypto is supposed to be decentralized, supposed to be the people's money, right? But other countries that already legalized Bitcoin as a currency for their country, how well have they done? You know what I mean? So that was like that case study run. But that's beyond the scope of this live stream, and maybe we could talk about it at a different time. But it's probably going to happen in the future, just maybe not in the immediate future for, adopting crypto as like the main currency and things like that. So probably stable coins are probably first. But we need crypto exchanges and the regulation to be finalized first. And that might be happening soon. Like I said in the news for past couple streams, that the IMF crypto regulations global white paper is coming out in September of this year. So we're starting to see like the beginnings of that happening. So thank you for that question. Again, this is not financial advice. This is not financial advice, just education and my own personal opinion on the current state of cryptocurrencies. So right now, a lot of people, they're just, obviously trading cryptos for speculation. That's what it is, NFTs and such. Okay. So I have another question here, Romeo from TradingView. I have to type something so I can see. So what indicators are good to realize, good low to go in? Well, there's a lot here. Okay. Instead of telling you, you can obviously see what I'm using, right? But I think for anyone who asks that question, I think the best thing I could do is just point you to the resource and then try to find the answer for yourself just by seeing what you're seeing, right? Because if you're seeing, um, right, I use a very basic in terms of this is like standard indicators that you'll probably see a lot of streamers or YouTubers or technical analysts use on TradingView. But if you open up the indicators page here, just click it and you go to technicals and indicators, and all of these are free to use. So I would say open up the assets that you're using and one by one, just look at it. I did that for many, many years, many, many sessions. Sometimes a whole weekend. I was that obsessed when I was starting out. I opened up every single indicator in here and I looked at all the assets that I looked at and I found the answer for myself. So I'd recommend that. If you don't even know what these are at all, then there's a good start. There's a good place to start. It's like you open up like, what is, let's pick a random one. Let me see here. Okay. For stocks, you could say like accumulation distribution. It's like you would have to ask, you open it up and you have to ask yourself like, what is this indicator, right? And you could probably find out the in TradingView help. There's I think there in the help there's like it's almost like a dictionary of little summary of what some of the major indicators do on TradingView. There's articles about it. There's Google and YouTube as well. So that's what I would recommend. It depends on your asset, your time frame. So there's probably too many common variables for that. So that's what I would recommend is just pop it open. You have a pro account, so you can have multiple indicators open, and that's what I did. I opened every single indicator, and if it makes sense to me, I would keep it as like a yes or maybe. If it doesn't even make sense to me, like if it looks like scribble, some of these is doesn't. I don't even use any of these, right? Like some of the, I don't think I use the SMI, right? I don't use this one because it just doesn't make sense to me, right? So these other ones make sense to me. I can understand what it is, but do I need it? No, not really. So I don't use those. Nothing wrong with it. That's what I'm saying. All right, let's do another one. We do have another request. FHM stock. First Horizon. All right, somebody trying to get in on the regional bank play. All right, so pretty much the reason why I've avoided showing and talking about, I've been well aware of this, about what happened in regional and small banks. But the reason I don't show it is because if somebody's like a beginner or they don't have risk management, or if, excuse that background noise, they don't have risk management or they have no technical process or strategy, then this could be a death trap for some people for in terms of like options traders or something like that. That's why I never show this kind of stuff. But if somebody has very, very controlled risk, very, very controlled risk, then maybe. Okay. Understand that there could be gaps up and down. We've seen it, right? Of like 10% or more, or even right here in one day, you had a negative 20%, negative 16% gap. So you want to watch out for that. This is a great example to pull up the gaps indicator. So just press / technicals, and this is a newer indicator gaps. Click it, and you can see it draws gaps for you on stocks where there are empty spots. And I like yellow color because I like seeing it like that. And voila, you already see the gap. So are we going to get a gap resistance play up to 1872 or $19? This is maybe. Right? Now, you're saying long entry. Okay. All right. So there might be upside down head and shoulders here on the daily. Now, let me just go ahead and put your 1687. That's right above 1687. Price target of $23. The stop loss of 1364. I see. Okay, you try to get your 2-to-1 play and then a very, very super large stop loss. So okay, that's I understand what you're trying to do here. Right? If you just open this just like a couple more percent. It might, all I'm gonna say is it might take a while to get back there, and it might not get back there right away because we're still kind of in the middle of the regional bank crisis, in my opinion, and it's spread to like European banks as well. So this is, you might have to hold this for a very long time for it to get all the way back up there. Um, that's all I'll say. And it did go to a downtrend. Obviously, probably if you look at like a 4 hour or something, it did hit this oversold, and we might have this upside down head and shoulders. But the target is about 10% to 20%. So 1782 is the first target for the inverse head and shoulders. If it goes 20, that's 1957. That's that second breakdown spot. So, you know, who knows? Maybe the worst of the fear of the U.S. regional banks might be kind of over, especially with what Secretary Yellen said. On this stock, I would say looking forward, we're having another Secretary Yellen speech this week. So that's probably going to be directly related to this stock play. But I do, all I'm going to say is please remember for education purposes to manage risk and small position size, especially with these super volatile names. Going back to Romeo's question, I do want to point out, Romeo, that it's not all about indicators. Let's go back for a second. And this applies to everybody who's watching right now. It's not all about indicators. Because when you're at the, I like to do an example like this. When you're at the store, right? Let's say you're going grocery shopping for food. Or let's say you're at Best Buy or wherever. Like sometimes I'll go to Best Buy or just look around. Look at electronics, like what's on the shelf. Or you're on Amazon.com. We're looking at the product and we're looking at the price when we're in the stores, when we're shopping, basically, or like reviews or specs or whatever. But for the most part, you look at the product and the price. So what is it and how much does it cost? So same thing is a lot of these indicators, I always tell people is if you understand, once you study the indicators, let's say you get like a moving average or something, right? And once you study it, anybody watching this is you're going to figure out on TradingView, YouTube, or Google is it's calculated using a formula. So this is way too advanced, but there's formulas for this stuff. Like how's a moving average calculated? You basically take the number of days and you divide it by basically the price, like the average, and then it's graphed in layman's terms, right? So, and then there's different types of moving averages, and then this is more a Cody, so this is not a very good example to show, but it's like a formula is what I'm saying. And most of these indicators, it's being calculated off of the price or the volume or some other number. So instead of jumping straight into indicators, it's very important that you understand price itself. Like what's the product, Bitcoin, and what is the price, history. Because people do that all the time when you're shopping on Amazon. It's like, for example, I was trying to buy electronics, right? And the retail price is, let's say, $100. But right now, it's on sale for $50. So I know, oh, okay, this thing is 50% off. It's new. I checked the reviews and the specs. It's what I want. So, okay, I'm going to buy it, right? It's on a discount. The same thing. It's very similar for stocks and crypto is, at the lowest price of pandemic, this Bitcoin product was $3,700. Okay. At the highest price of inflation and crypto mania, Bitcoin was $70,000 almost. So then when Bitcoin comes back down to $15,000, it's like, how much discount is that? It's the same product almost. It was 75% off. So buy. That's another way to think about it, right? So it's not all about indicators because you could get into an indicator trap. Because when we go to the charts, when we go to the store, we're not buying indicators. We're buying the product and the price. So it's very important to know that for everybody. That's probably one of the best education pieces you'll find on my stream. What I just said right there. Information, knowledge. All right, let's move on. We're really turning it up on this stream. Thanks so much, everybody, for the good questions, the good energy. All right, let's go to crypto and we'll close out here. So now with that in mind, Let's take a look at Ethereum. What's going on here with Ethereum? Let me bring up a new chart. Gemini. Just use a random Gemini chart. All right. So same thing is, remember last time on last stream, there's that question of, is the price going up? Is the price going up? Question mark. Is it going sideways? Question mark. Or is it going down right now? It's actually kind of going up. If you think about it, it's like angling up right now, right? If we were going down, it would still look like that. And we were going kind of sideways for a little bit, but we're starting to tighten up and it's like starting to angle up a little bit. So that's good, positive news on the technical side. Getting more specific, we have a symmetrical triangle that just had a little bit of a breakout. That's good. That's good for now. Now, the target's anywhere between 40 to 85% up. So 40% to upside, 2366. 80% to upside, 3150. The big question remains, can we hold the support, right? Because sometimes in crypto, the price, we get a little rally and then we can't sustain it, aka September 2022, and we have a downtrend crash. So we must sustain these rallies, the bulls, meaning investors need to hold and new buyers need to come in, right? If everybody starts panic selling, then it's going to crash. That's what happens. So we need no bad news, and a combination, no bad news, no government intervention or lawsuits, and then positive catalysts that's happening in the world, positive catalysts with crypto. Some people might get their tax refunds in April in a couple of weeks or a month, and then we might see just a little, if we can get a little bit higher highs in the price to really get kickstart the rally. So my line in the sand is probably $2,000 in terms of long-term investment. If we can break and hold above $2,000, that would be great. Breakout resistance or $2,000 level. Breakout resistance level. Excellent. So now we know on the top side, that is that nice breakout spot. So in terms of downside risk, which we always need to remember, it's like a 1350 downside risk. 1350 downside risk. That's our support. Breakdown 1350. You might be saying, wow, these are way too wide for me. Then you might be more of a day trader, a scalper, intraday type of person. But as an investor, for crypto at least, it has to go past one of these levels. There's an intermediate level here, like 1600. It has to go through it first. Do you know what I mean? It's not going to magically... The fallacy is if somebody does not look at charts every week and looks at crypto, let's say like once a month or once a year, then it seems like the price is jumping all over the place because last month it was $900. This month it's $1,800. Wait a second, it just went 100%. What happened, right? So that's why if you look away with crypto for a very long time and never open a chart for a year, you will be very surprised at what happened with the price. It's either up or down, like plus 50 or plus 100%, right? That's why people are in crypto. And it's just amount, it's all that matters is the speed. How fast is it happening, right? If somebody wanted this leg, that was only a month for 75%. That was incredible. That was an incredible play on Ethereum. Hit another support play, buy, up 50%, right? Now I decide as a swing trader, am I going to hold? Am I going to buy more? What am I going to take profit? It depends on you, your strategy, your goals, your wants in the market, your needs, right? So these are the two big numbers that I'm looking for. Long story short, if we can hold this higher low upstairs pattern on Ethereum, good to go. We're good to go. If it starts going sideways and down, we have a problem. So do not buy, right? On that example. Next, Binance Coin. If you have more requests, just let me know. Let me just refresh, make sure I don't miss one. Romeo has another question about indicators. Can I use volume to make better prediction with indicators? I'm using RSI MACD. Yes, you can. Yes, you can. For example, it's not 100% though, and I don't want to get too much into this, but I would say focus on the price itself, like the actual price itself, probably like 80%. 80%. And then the other 10% could be 10 to 20% could be like indicators or, volume and stuff like that, just for technicals. Because if I'm honest, it's like, well, yes, you might be wondering, if we just look at volume itself, it's like, wait a second, we have what's called the volume climax. You have a huge green, you have a huge red. What does that mean? Right? And if you study enough charts, you'll know this particular one wasn't quite the top, but it was close to the top of the highest price of Bitcoin and Binance Coin of all time. Right? It happened 2 times. So sometimes it's there, right? Now, in terms of the low as well, it didn't really work out so great and so well here, but it's pretty close, right? This is a relative low, sometimes a volume here and here. But in terms of getting the exact perfect bottom, you have to stare at the price more than. So I would recommend try not to get, consider not getting, too into indicators, because it's all coming from the price. It's all about price and volume. That's why I only care about price on technical analysis like 80% of the time. What's going to make me change my mind on that is, let's say, if Binance has like a scandal. If Binance Exchange does something illegal, I will pay attention to that as a trader and probably short or sell. Right? Or if a company, if like a huge company like Apple has like fraud or illegal, it's like, I'm going to short that. Right? That's bad. So, you're going on the journey, because I was there too. Anybody watching this, it's like, what about this indicator? What about this thing? What about this? What about that? Then, as you go on your journey and you learn more and you test more and you find out more of the information for yourself, the knowledge, there's strategy tester down here. There's paper trading down here. You can test it all. For me, I've distilled it down to simplicity. And there's a lot of connections, relationship with nature itself. It kind of sounds crazy, but it's not, right? How long does a tree take to bear fruit? It takes months. How long does a stock in crypto take to bear profits? It takes months as well. Warren Buffett made that quote. He said the quote in terms of, speed of trading or trying to get, too many profits, I'm paraphrasing half of his quote, but a baby takes 9 months, right, to be born. So same thing with a investment. Probably need to hold it for a year, right? And then it probably depends next on the entry spot. The problem is, a lot of people is, without any technical knowledge or process or successful strategy or anything, is they're buying high and then holding that for a year, and then it crashes down for a year. That happens to a lot of people, either on trades or on investments, right? So then the remedy for that is twofold: is have a stop loss, maximum dollar loss before you pull the plug and you liquidate, right? So it would have been something like that. So you only lose 10% on a small amount of your capital, so you're never in that position in the first place. Or you just have to buy at an amazing spot that depends on your technical analysis skills. So I'm feeling this again. This is good education. I'm looking at Binance Coin for 2022. Well, let's look at it like this, right? Most people might have gone into crypto somewhere up here, right? So we're looking at these blue lines, and this is probably one of the final examples for today. Is okay, I understand. Most people probably did not buy crypto in the pandemic crash because there's too many problems. Now, if somebody got into crypto in the past 1 year, which is only 2022, it's up hundreds of percent from the bottom, right? It's up 4,000% on this particular coin, right? It went 40x. You have to understand that first. But let's do a little bit of ABCD example. Is if we know we're up 4,000%, but still you could see in this example between the lines, there's a relative high and there's a relative low, right? So if you look at the price as a long like this, trying to make money when the price goes up on whatever asset. Now, do I want to buy at point A, B, C, D or E? This is like a harder example. This is a trick question because it depends, right? If I'm a long, bull, I want green. We need green to make money, right? If I'm a long, where do I want to buy on this chart? And I'm already giving you a hint. Okay. Let's use I'll walk you through this one so it's not so stressful. All right. If we're longs and we're looking at a price chart like this, doesn't matter if it's crypto or stock or Forex or whatever you're doing, or ETFs, is we want to try to buy low, sell high, because if you buy high, the chances are higher that it's going to crash down on you. Does that make sense? The higher something goes, the more risk there is in terms of investment and trading. That makes sense because the price is too high and then people are going to sell to take their profit. Shorts are going to attack. So A and B is not a good spot to go long. But that's where a lot of people went long because that's the maximum FOMO of $70,000 Bitcoin. That was the maximum FOMO. So you have to train yourself, practice. You don't want to buy here long. You don't want to buy here. C, you don't want to buy here either, because if some people might buy long C and say, like, wait, there's like a support right here. Why wouldn't I buy there? Because it's still going down. It's angling down. And once you lose that support, the bear is going to attack hard. So where do I want to buy ultimately? In the D zone down here. So it's not a D grade setup. It's actually an A grade setup. It's just called D on this chart. This is an A plus zone to try to enter a trade. Why? Because support. Once you understand and learn about support, that's all you need, right? Everything else is fear-based, right? In terms of like that, this is where the emotional control and all the practice and skill and knowledge and paper trading and back testing, strategy testing will come into play. Because unless the crypto market is going to get banned, right? What are some worst case scenarios that crypto is going to not exist anymore? If USA bans cryptocurrencies for trading and investment, that would completely crash the market down like negative 90% or whatever. Everything would lose so much value. Okay, if government bans crypto, if if your exchange goes bankrupt, if your crypto goes bankrupt, if exchange is fraud, then you lose all your money in your crypto account. That's happened to people in the past. So aside from those risks, right? If the coin is good and the company is going to survive, then I want to buy at the discount. How much discount was it? Negative 60% off. Again, it's like the store. It's like I walked into Best Buy and I saw Binance coin on the shelf and it's like, oh, it's negative 65% off. Is there anything wrong with it? Is there anything wrong with this company? Anything wrong with the people? Oh, no, it's still the same product. It's 65% off. Okay, I'm going to walk out and buy this right now. And then long. That's the mentality. But not just random like that. It's like, all right, what's my stop loss? What's my maximum dollar loss if I'm wrong? What's my profit target area? Somewhere here. And that's a 50% profitable trade. It's a series of decisions based on knowledge, skills, and experience and risk management. So somebody could try to enter on E, but the same problem is that's a relative high. We just bounced off of section D. Right? We're already up 50%. So for this thing to go another 50% or 100% is we need some major positive good catalysts to happen with Bitcoin and cryptocurrency and tech stocks and fintech financial stocks. We're not having that right now because we have bank problems. So what does that mean? Either sideways or down. Right now it's sideways. And we're right at the roof of this structure. So a little bit dangerous to buy breakouts. Sometimes when they fail, you get caught in a loss automatically. Right, negative 25%. That's really bad. Can't have too many negative 25% losses. Right, keep the losses small. It's risking 1% capital, so that's why one trade should never destroy you. But in terms of this, right? Let's say you're saying, wait a second, no FOMO charts. What if this thing went way down here? What about F down here? F. Then it gets trickier, right? It's like, where's the bottom of the market? That's another story. But if we're just talking about relative lows, relative highs on this one Binance example, that's how I play Binance. My strategy, my style, buy D, buy low, sell high, or take profit or move my stop loss up or do something and make sure I lock in the profit so I'm not going to lose it, and then maybe sell here at section H later, right? A lot of decisions to be made, but it's all about knowledge, skills, and experience. So if you're like, I don't know what I'm doing right now, that's okay. That's okay. Everybody starts off with zero knowledge and experience. But you're at the right place if you're in TradingView. There's a lot of free education, including myself, but a lot of streamers, a lot of free education articles, ideas, people, every single day, every single week. So you're in the right place. And then it's about, even for me, continuing to learn and practice and optimize and apply knowledge into action. Knowledge into action. How do you do that? Study the price, study the tools. There's a lot of free tools on the left side. Study the price, study the volume, study the indicators, and then put it to the test in paper trading and bar replay up here. Bar replay, put it to the test. And that's why TradingView made the buy sell, and you can actually keep track of it. Wonderful tools. It's all a matter of how hard somebody wants to try to do it. I went hard. I studied for like 8 hours a day long time ago when I first started on like a Saturday. I was that kind of hardcore technical analysis person, and it took years to really refine my skills. So I could open up any chart and just know what's going on, right? And make a plan of action. Where am I going to buy? Where am I going to sell? Etc. It's a very long speech, but I hope that encouraged somebody out there. I went over time about 20 minutes. I put a lot of education, a lot of information, knowledge, and skills here. Okay. I didn't see we have one more request. Okay. And then we're going to close out. This is the very, very last one. PG. Procter and Gamble. PG. Consumer non-durables. Household personal care. So before even jumping into PG, why don't we look at the consumer discretionary XLY for a second? Okay. So XLY, we know uptrend, topping out pattern, downtrend, and then we have a support pattern. So it's trying to hold the support above 130, that resistance point probably about 156 area between these two yellow lines. There's a little bit of a potential reversal sign there, and the trend line has been broken and retested to the upside. It's a little falling wedge breakout pattern that might happen here. So then, if we flip to PG, you can see somebody might say, wait a second, no FOMO charts. I see it. I see it. Isn't there this large upside down head and shoulders pattern? Yes, there is. However, over time, I've learned that patterns, you wanted to kind of, this is real, but it would have been better if there was a significant downtrend and then it happened down here like this. It's still valid, but you could just see it. We had a double top into an upside down head and shoulders. So we went bearish to bullish. All right. If the neckline is 149, see if we get this breakout, right? If it has to hold above this and break out 25%, 187, that's the upside target. But it has to break through 154, 161 to hit this target to the upside. And high low, all right, you have to see it has to pummel through that level 2. A lot of this resistance right here on this blue. About $10 to $15. A lot of move for PG to try to go there. It's like 12%. See if we could do it though. Line in the sand, 136. So let's look at your trade. 147. All right, so you have a little bit above here, like 28 cents. 47. Price target 153. These are just examples from TradingView, Casey. This is not my recommendation for anybody. 143.58. Educational trade review. A little tight here. I see what you're trying to do. You're trying to target to that next resistance. All right, that's valid. It's valid. Just open up a little bit. Maybe put a sell order, educational wise, I got 154.31, slightly below that. But again, if you're trying to optimize, if you're here to learn and try to optimize, this is a very, very obvious support play. It's so obvious in terms of if you're looking at this. Personally, I wasn't looking at PNG, so I didn't see this one, but I'm saying if you see this and it starts breaking above the square, then the tighter entry would have been right here at 141. Right here at 141. And then you would have been in profit because there's a slight chance that if it doesn't break out, it's gonna hit this resistance 148, which goes just a little bit into your trade or our setup, but it won't pierce. It might not pierce all the way. It really depends on the rest of the market if it's going to rally or not. Is it overbought? No. So it could keep going. It could keep going. But in terms of my set of my criteria, it's actually in the 5-15 minute overbought range. So day traders, they might try to play with this one a little bit in terms of the volatility. Remember, trying to buy a dip. Is it a dip? It's actually at a 4-hour high, right? If you look at this, it's 4-hour floating in the air. A dip would have been right at 143, and then you would have been in on this trade 2%. So that's why swing trading, the timing is actually more important. It really depends as well too, because if you just kind of you want to buy, and this is not for Casey, I'm saying any trader like wants to buy something, but then the timing of where is it? Is that a dip? Is that a support level? Is it low at all? Versus we want to get away from the what I call watch list trading, where it's like, oh, it's 3% up, buy, and it's like, wait a second. I talked to one of my professional colleagues about this. Is one data point, it doesn't really mean anything. We have to see the data laid out with more data points, more data, more time. You get to see more context. So it's not just plus 3% or negative 0.32% or plus 2% on PNG is like, that's one candle. If we zoom out and get more data, which is why I love TradingView, is we see, oh, we just went from a huge rally to a triple top, lost this, support, short that thing down, lower, low, lower, high, lower, low, to a quadruple bottom support setup, and then buy this thing right here if you're a swing trader. So just trying to tighten it up for people, because sometimes breakdowns can be very punishing. All right, hopefully that helps. And I went way over today. All right, so thank you so much everybody for watching here on TradingView, YouTube, Twitch, and Discord. Again, if you like this stream, if you learned something, if you want to support the channel, go ahead and click that follow button or cheer donate. Would always be appreciated to keep the stream going and the ideas flowing. Thank you so much, and I will see you probably, let's open the calendar, make sure, probably April 2nd or April 3rd. So next Sunday or next Monday, I'll probably return to the stream nighttime on USA time. Okay, everybody, hope you have a good week, and I'll see you next time. Thank you. Bye-bye.